Good morning, this is the JJT YouTube channel. My name is Jacques and I'm joined, and this is our Biz Growth Challenge series, and I'm joined today by Fons Bogdanos from Aida Elite in Kempton Park, a real estate agent. Thank you for being here, Fons.
Thank you for having me. It's been we've been talking about it for a while.
Yes, thank you for coming, and it's I finally came around to it.
Yeah.
All right, so let's get right into it.
Sure.
Firstly, what is the role of an estate agent? So for those who are unfamiliar, what do you do besides just buying and selling property?
All right. So a real estate agent, same way as an accountant or an auditor, a financial service provider. It's not just going to a house and putting a sign outside and putting a property online. There's a lot of continuous education that has to happen. There's accreditation that needs to happen, and the bare minimum is an FFC. So, like I said, that's a bare minimum, even for a candidate agent. So our role is to protect the buyer and the seller at any given time with information and with our compliance.
Okay. So do you have a specialization in a type of property?
So we deal in commercial, residential, rentals, sales, and rental management. So yeah, we specialize. We all in one, basically all in one shop, and we prepared to help our clients with everything.
So we could actually ask you pretty much about any part of the industry.
Yes. Yeah.
Well, that's good. That's good. All right. So what are the most common misconceptions people have about real estate agents?
Well, people often think that our job or estate agents are overpaid. People always think that we just list properties and wait for people to come. They think that we possibly lie. So I know it's hard to, that one bad estate agent obviously perpetuates the misconception for everyone. So do your research and find the right real estate agent. I think an estate agent is not just paid to list your property, they're there to protect you.
Okay. Protection is an important part then.
Yes.
So, and I assume that's one of the ways where an estate agent can add value to an investor or a buyer or a seller or a business owner.
Definitely. Compliance, like I said, is 90% of our business. Same way compliance is 90% of your business. Am I correct?
Yeah.
So with us being knowledgeable about our products and our industry, we're able to protect clients and get the best possible outcome for them.
Okay. So is there, so the best way that you can add value is that you're getting the best possible outcome for your client, which is either buyer or seller.
Correct.
Okay. All right. So what should first-time buyers or investors know before looking at property? Because there's a lot of these influencers on social media saying this is what you do for investment property, and when you're doing property, and there's, as an expert, what should people know?
To do your research always prior, whether it's about the property, whether it's about the area, whether it's about the investment. I would suggest not only speaking to your real estate agent, but also to your accountant, your lawyer, and determining what your actual property goals are first, and then acting on them. So a lot of people make the mistake of buying a property in a company because a trust, because they heard that trusts are very good for protecting their assets and stuff. But you know that works in certain situations where that is the best possible vehicle to buy a property in. So I think doing their research generally Like I said, area, their property goals, the vehicle that they're going to put the property in, whether it's their personal name, a business, a trust, or a combination of, as you know, is the best way to go forward. Pre-qualifying themselves before they get before they apply for finance, to see if there's any skeletons in the closet, old judgment, a doctor's account that wasn't paid and is creating havoc on their, somebody that took out a credit card in their name without them knowing. All of those things obviously impact your credit profile, and a marginal 0.5 or 0.1 over 20 years
Makes a difference.
huge difference in your bond repayments and what you pay at the end of your term. Area. It's the age-old question, the age-old saying of location, location, location. Or what they say is buy the cheapest possible property in the best possible area. So things like that. Then you've got the condition of the property. How much you're prepared to pay to actually upgrade it, change it. If you do that, are you possibly overcapitalizing? So all of those things you have to think prior to buying, and you can't use emotion. Emotion comes afterwards. You got to use the numbers first, and emotion comes later. Even if it's your personal home and it's not a property investment, the numbers have to make sense first, and then the emotion can come, and we can put the kids' playroom there. The dreams can come afterwards.
Yeah, like that makes a lot of sense. And it's very similar to our natural process that we did when we bought our house that we lived in a few years ago. So,
but you are very you're a numbers person, so you wanted to see the numbers first.
Yes.
And then you wanted to see, okay, where's the kids' room going to be? Is there space for a pool or a play gym, a little play area
also
for the kids?
My wife, who's a people's person, she also phoned her dad, who's very strong with investments as well.
Okay.
So this is what we're looking at. You got some input from him, and at the end of the day, everybody decided, no, this is a good buy.
No, definitely. Every property, whether you're an investor or not, it's an investment. So number one, it's an investment. It's the biggest investment you make in your life. So yes, you're not planning on ever selling the property, but it doesn't make financial sense. If you need to sell the property, can you sell that property easily? These are things that people must obviously take into consideration before they buy.
And life happens.
Life happens, and you need to get rid of an asset, and you need to get rid of it quickly. You get a great job opportunity down in Cape Town, and you need to sell your 4-bedroom home in Joburg, so you can buy a shoebox in Cape Town. So you need to sell it quickly. You know what I mean? So you can't think, okay, I'm never going to sell the house. At some point you might. At some point you might have to. At some point you might want to. So it must make financial sense at the end of the day, emotions aside.
So what financial documents or preparations are needed before applying for a bond or a purchase? Now, you mentioned pre-qualification.
Yes.
And anything else that we need to prepare?
So if you are a salaried employee, you just need obviously your up-to-date bank statements, up-to-date pay slips, and your ducks in a row. Then you send it through to an accredited bond originator. There's big ones, there's smaller ones. Your bigger ones like Uber Home and your multi-nets. Then you get smaller companies as well that are also accredited and are very good. Again, do your research on the right bond originator. If you trust your real estate agent, ask them which one do they recommend. Alternatively, do your own research through your peers and stuff, and find out who the best bond originator is. If you are self-employed, like you and me, you'd need your up-to-date financials, as you know, management accounts possibly, and you need all of those things prior. A bond originator will do a kind of an audit on a business on the documents that they've got ready, and that would determine their pre-qualification. Obviously, you know your income, and so you'd have to guide the bond originator on how much income you're making through the various streams. But you need your up-to-date financials, audited financials, possibly clean bank statements, tax compliance.
What I've heard, that's the thing. What I've heard recently is the bank started asking for clients' actual tax assessments.
Correct.
Because I think people were dishonest in declaring their income to bank bond originators and things like that.
Definitely. Even if it passes the bank stage, once it goes to, you can get into trouble at a later stage, and you'd be able to tell us a bit more about that. At some point that you have to pay your transfer duty. And so your details are sent to SARS, the property's details are sent to SARS as a seller, as a buyer, and then the transfer duty is determined. If you're declaring to SARS that you're earning 10,000 Rand a month and you're buying a 10 million Rand house, red flags are going to,
That's when they start looking into your lifestyle audits and stuff.
Correct.
Like that,
So, that goes without saying. I mean, obviously have your taxes up to date, have everything up to date, but again, consult your accountant, your bond originator, your estate agents, and they can all guide you. But most important, their accountant and auditor.
Right, thank you. All right. So, what mistakes do people often make when they're buying property? And it's mistakes that can be avoided.
Number one, and we saw this post-COVID, is overstretching financially. When you are purchasing a property, you must always consider what happens if the interest rate goes up by 5%.
Yeah,
it's not a stretch. I mean, we saw it during COVID, or just post-COVID, it went down to 7%. People were buying like crazy. And 2022 and 2023, we had because we're on all the bank panels for distressed homes, and we sell a lot of them. We were overwhelmed with a lot of distressed properties because people bought at 7%, and when it went up back to I think 14%, how much was it? They just couldn't cope financially. I was making the analogy of a beauty competition, and basically your home is competing online with a whole lot of other homes. So something as simple as when you get into the home and you don't even realize you're doing it, but when you pull the car into the garage and you're about to go into the house from the garage, the door that leads into the house, you got to pick it up, pull it, and push a bit, and then it opens.
Yeah.
Okay. When an estate agent is taking people through the home and can't get that garage door open when they're trying to like take people through, people are looking to see maybe there's a bit of settlement in the property. Meanwhile, it's just a sticky door handle.
Yeah.
Okay. And they're thinking, oh, maybe there's a bit of, because I did see a bit of damp outside. So all of these small little things, don't help the saleability of your property. You're used to them. So I'd say get the most critical person in your life. We've all got a sister-in-law, a friend, a mother-in-law, to say, walk through my home as if you're going to buy it, and go through all of those things. And they'll point out a lot of things that you live with and you don't realize. An estate agent will also help assist with that and say, your curb appeal isn't, I mean, it's a beautiful home, but on the outside, there's no appeal to, nothing pulling you to walk into your home. Maybe it's just the verge or finishing off your front wall. Small little maintenance issues, updating bathrooms, kitchens, again, within reason. Speak to your estate agent and keep in contact with an estate agent just to see, number one, that you're not over capitalizing, and number two, if you had to put your property online for sale today, how is the saleability of my home? and just keep up with it over the years, and then you don't have to spend the massive amount to maintain things at the end of the day.
I mean, your topic is how to keep a house saleable over the last lifetime. How can a seller get the best price for their property?
Pricing it correctly from the beginning is number one key. So I know that we look online and we see other homes in our area and we say, oh, well, my house is nicer than that one. And they asking for 3 million rand. And thinking, okay, well, we're going to go 3.2, 3.3. That property might have been on the market for the past year. Are you prepared to keep your property online for 2 years? Agents through, buyers through, preparing for show houses, preparing the home, making sure it's neat while you've got kids and all of those things, because in the afternoon you've got a viewing. So number one, pricing is number one. And then getting the right estate agent to give you that price. If you don't agree with the estate agent's price, you can always get your own independent bank valuator. An independent bank valuator would tell you how much a bank is prepared, the maximum a bank would finance a property for. There's no use in trying to go above that, because a bank won't finance for it.
Unless you get a cash buyer, essentially, which is very scarce.
If you've got 3 million rand cash lying around, it means you've done very shrewd business decisions in the past. Overpaying for property isn't one of those decisions.
Exactly. Yeah.
Okay. Yeah. In a world like full of information, obviously that information is there for the buyers as well.
Yeah.
What properties sell for in an area, it's all out there. It's very easy to obtain.
So what marketing strategies are most effective when selling a property quickly?
Pricing, again, I'm going back to pricing correctly. We could possibly get for a property, let's just say 2 point, I can't remember what the brackets are on property 24, but there's various brackets. So let's just say we price a property at 2.6. The bracket on property 24 is 2 to 2.5, and then 2.5 to 3 million. And you're adamant you just want above 2.5. The problem is you're eliminating everybody that can afford 2.5 and is looking their maximum at 2.5. You're eliminating hundreds maybe of potential buyers just for that extra 100 or 50,000 rand sometimes that you want extra over and above. Number one, pricing. Number two is just what affects the saleability.
Saleability and how quickly you can sell it.
How quickly you can sell it. Removing the emotional attachment from the property. Okay. So I know it sounds like very new age and very. If you don't want a property to sell, really, you emotionally attached to it or whatever the case, you have to release that property in your mind and whatever. So because the decisions you make after that influence basically, so you won't be very accommodating to the agent when he wants viewings. You'll be like, he wants to view it again. We're trying to sell your asset. So if you really think about it, do you actually want to sell a property? Yes. Okay, then release it and make everything possible for that to happen. Make sure that's tidy. Make sure that's decluttered. I know there's families with children and stuff living in the house, but unfortunately you have to make the house look like a blank canvas for somebody else to see their own life in there. And if the only thing that they can see is your clutter, they can't see their life in it.
Yeah.
Okay. Smell. I know it sounds it's the age-old thing. Put cookies or in the oven. You hear the Americans on their shows. A scented candle, essential oils basically inside the house. something like vanilla, cocoa, all of those things give a homely feeling. Cinnamon, give a warm feeling to the home. I know it's small touches, but it works. When it comes to the marketing side of it, each agent has their own strategy. Each property should have its own strategy. A lot of people don't know this, but when you're signing a mandate, the second page, accompanying the mandate should be a marketing plan that an agent actually has to provide for you. Okay. So those marketing things can be, and if that agent doesn't comply with those, with that marketing plan, you can actually cancel that mandate. That mandate is null and void. If he said they were going to do professional photos and video and they came with a camera, with their cell phone, taking photos, you can cancel that mandate within the time. I mean, that's, yeah. So each agent and each agency, each property has its own needs. Okay, so a townhouse, maybe a trendy TikTok video would work because it's attracting a younger buyer. That won't work for an old age home that you're trying to sell a unit in.
Yeah.
Okay. Facebook Marketplace maybe is a better option. All right. So there's different strategies for different properties. Okay.
So what are some common pitfalls that sellers face during the selling process? I would assume, coming in too high with the selling price.
Too high with the selling price, managing the expectations, thinking that it would sell immediately when it won't sell, not bearing in mind some of the costs that are involved with selling a house. So obviously you need if you've got a bond, there's a bond cancellation fee of about 6,000 Rand. When it comes to the electrical compliance,
COC's agent commission.
Correct. COC, agent commission. If it's an older house, it could be 30,000 Rand that they need to get their house compliant with the electricals. I mean, it's the wiring shots, or it's not the way it was done in 1988 is not the way in 2026. Correct. Gas compliance. It is good to get all of these things while you're busy. Remember, keeping your home prepared to sell. So you buy the home today, and I'm going a bit on a tangent, but every change that you make electrically, because when you buy a house, you get an electrical compliance certificate. That's valid for 2 years if you make no changes. You buy the house, you install an air condition, get a COC for that air condition, but you drew the line there. Then you add it onto your existing one and it's valid for another 2 years. Then you change something else within that 2 year, add it on. So at that point you won't need to get another compliance certificate if you've added on a different compliance certificate for each thing that you've done.
Yeah. But then again, if it's been more than 2 years,
correct, you need to do that. You need to rates clearance, levies clearance. You have to pay 3 months in advance or clear out any arrears that you have, and 3 months in advance. So when the property does transfer, it's transferring clear. So those are things that people have to bear in mind.
Okay. So how should business owners evaluate offers and negotiate effectively when it comes to the buying and selling of property?
So how a business owner or how a seller?
Business owners specifically in this case, but if you want to generalize it to a seller, you're welcome.
Okay. You've got to take the emotion out of it completely. It's a financial decision. When it comes to the price, selling, buying, whatever the case is. So you've got to understand that if you're a buyer, that there's a bond on the other side. There's all of those expenses we talked about for the seller, the agent's commission, everything. So just because they bought it for 1.5 doesn't mean you can get it. And that was 10 years ago.
Yeah.
And if you offer a cheeky 1.2, it's going to go through because, he'll take a bit of a knock, but he's still making because he only owes so much on the bond. And it doesn't work like that because there's those other costs. And obviously, they doing a business decision as well. They didn't buy the property to make a loss. You do get bargains out there, and you do get people. You can take the chance. And as a seller or you got to see it as, now this is a business deal that's happening. I'm selling my assets. How much do I want to get rid of that asset? Is that asset a liability for me now?
Do you just want to free up some cash, or do you actually intend on making a profit?
Correct. I mean, yeah, so you got to look at it as a business decision. You can't sit and think, no, but my property is worth so much more. On paper, what is it worth? And what is it worth to you right now to get rid of it?
All right, so here's a little bit of investment and strategy, and this is particularly for business owners.
Okay.
But it could also be applicable to individuals. Most of our viewers are business owners and people that's interested in business and investment and financial growth. So how can a property investment support business growth or personal wealth?
So I'm going back to our discussion in the beginning when we started off, and we said that basically every decision, you have to determine what your goals are. You might have to sit down with your accountant, you might have to sit down with your lawyer, with your spouse, and say, okay, what are our property goals? What do we want to retire and attract an income? Do we want to, when we retire, sell everything and live off that?
Next question we've got is, what are the biggest risks? So,
I just want to go back onto,
okay.
All right. So, as I said, that sectional title is a no for good return on investment. However, again, going back to your needs, as if you want to be a hands-off investor, where the place is looked after, the sectional title, a part of it, obviously, is a solution to a lot of those issues for you, where the property is maintained on the exterior, and you make sure that your investment is, especially if it's in a good sectional title, that your investment is looked after. Diversifying, like we said, well-located residential, entry-level or mid-market pricing, strong rental demand in the area, and low maintenance is like the key to a good investment.
All right. So that back to the question: what are the biggest risks investors need to consider, and how can they mitigate them?
So,
forgot the door again. So the biggest risks.
So biggest risks include like poor tenant selection, underestimating the costs. These are mitigated through conservative numbers and proper screening of tenants, and obviously professional management of your property. Most losses come from decisions, not a bad market.
Okay. Decisions, again, education and preparing and planning and all that.
Correct.
All right. So how do you identify clients, or how do you help clients identify up and coming areas with potential growth?
I'm always involved with in my suburb, in my areas of, but I do the whole East Rand basically, and I've sold almost everywhere in Gauteng. I've engaged with good town planners that explain basically, if I'm looking for, we've got a common client that's looking for certain properties to do a very specific business. So I asked for guidance which areas would obviously facilitate what exactly needs to be done. So it's no use in buying the right property in an area that isn't conducive to what he wants to do to get obviously zoning and all of those things. So knowing what's happening in an area in future as well, what areas are earmarked for. So you might be buying a home on a main road thinking that that property is can get business rights. Meanwhile, you can't actually get business rights on that property for X, Y, Z reasons. So obviously doing your research, again, knowledge is power, and especially when it comes to property investment, just finding out what's going on in an area, new developments. If there's vacant areas around it that could possibly become squatter camps or urban crawl, basically from a CBD, what is blocking you from that? Schools in an area, help for always finding good tenants that want to put their kids in a decent school. Job opportunities in the area as well. If you're buying a beautiful property, rental property, but there's no job opportunities in the general vicinity, I mean, you're not going to get the maximum out of your property as you can.
Yeah. All right. So what's the one key piece of advice that you would give every property buyer or investor?
Don't rush, I think, is the number one thing. Do your research again. Get educated around yourself and surround yourself with professionals, basically, that can guide you into what you want to do, whether that's an accountant, a lawyer, a real estate agent, if you are looking to rezone a property that is a town planner, it is a bond originator. So surrounding yourself with the right people to actually do all of those things that you need to do. People, right people.
It's a good leadership point of view to have anyway. Find the right people for the job.
Definitely.
So if a business owner wants to start investing in property, what's my first step?
Speak to a bond originator and understand affordability and risk. Define your goal before viewing the property. So obviously, it's going back. I'm going back to it's planning. Everything is planning. I know probably it's my character type. I like to plan and look at all the possible outcomes before they actually happen, so you are sure of your decision. You can't blame an estate agents if you told them to find me a house in that area for so much, and they did, and then you can't complain that no, they didn't tell me that. You didn't know what you wanted in the first place.
Yeah.
Whether it's for zoning or whatever the case is, be very specific in what you actually want and looking for, so you can actually find it.
And why?
Yeah. What is your why in investing?
Good points. All right, thank you very much, Fons. That's the last of my questions.
My pleasure.
Thank you for coming through. This has been Fons Vogdanos from Aida Elite in Kempton Park. Any real estate related queries, we discussed a bit about real estate investment, but also residential property for your personal capacity and things like that. Then if you liked the content, if Fons gave you some good advice, please click on the like button. It will give both of us some feedback. If you want to see more about this kind of content with more interviews with other people, business owners, people that could help business owners as well, feel free to subscribe. And then, yeah, my name is Jacques. This is the JJT channel. And thank you. Have a great weekend.
Thank you.
JJT